Welcome to our YouTube channel. We are here with yet another video in our series of one-to-one with fund managers, where we hear directly from the experts who manage your hard-earned money that you invest in mutual fund schemes. In today's episode, we are delighted to talk to Mr. Chirag Dagli, a seasoned fund manager from DSP Mutual Fund. He manages prominent funds like DSP Healthcare Fund as well as DSP Multicap Fund. Healthcare has been a promising sector for past many years, and the importance of the sector has been growing stronger. It is obvious that you cannot avoid healthcare and medicines. Generally, we as mutual fund distributors hold a strong opinion of not investing in sectorial funds, particularly when it comes to retail investors, as the risk of investing in any specific sector is quite high. However, we found it important for our viewers to bring an expert's view to get an in-depth understanding of healthcare sector, how R&D is shaping up this particular sector, and how India is positioned in the API manufacturing post-COVID-19 times. Most importantly, the DSP Healthcare Fund focuses on various segments of healthcare businesses, which includes domestic and export-oriented pharmaceuticals, hospital chains, diagnostic centers, R&D, API manufacturing, and many more. With over 20 years of experience in the equity market and a deep understanding of the healthcare sector and beyond, Mr. Chirag joins us to share his valuable insights. Through this session, he will share his deep knowledge and understanding about this sector. Hello, Mr. Chirag. Nice to see you in your office once again.
Thank you so much. Pleasure is all mine.
Thank you. So, I used to disturb you a lot. If you really see for last 2-3 years, whenever there are client-specific queries, I used to call you. We just thought this time we will come to your office, hear your thoughts on this particular domain of healthcare and pharma, in which you are, I think we would really want to hear your expertise. And especially this time, where from one side, Trump's tariff and government of India or government of Bharat also has done some quite changes in the pricing of some life-saving medicines, how this particular thing is going to influence the pharma sector. Because pharma as such is quite large. You have pharma for medicines for our local consumption. You have medicines for export, right? You also have something like hospital chains. You have R&Ds. You have APIs post-COVID-19, and you have diagnostic centers. As such, how are you looking at this sector? What is the opportunity for our investors? We just want to hear your views on that.
So let's start with the tariffs, right? First, the numbers, right? India exports about $9 billion worth of pharmaceuticals to the United States.
9 billion?
And yes, 9 billion.
Okay.
All of this is largely generics, right? Which is off-patent, really cheap medicines, right?
Okay.
And we have a very large market share. India has probably 50% of the commodity generics sold in the United States of America come from India, right? So we're large and huge, and of course exports is a very large opportunity.
9 billion.
$9 billion.
Okay.
Now, if you look at what we import from the US, we import roughly about $800 million worth of drugs from the US. Most of these are very, most of these are patented, innovator,
Okay.
small volume products which are, new medicines in some sense, etc.
Okay.
Expensive drugs.
Okay.
So this is the spectrum. What we export is really cheap generics, commodity generics. What we import is largely innovator pharma molecules. Now, the other nuance here is that of the $800 million worth of products that we import from the US,
Okay.
about $400 million is import free. There is no import duty. Another $400 million has some import duty, which can potentially go to zero if during negotiations,
Okay.
Mr. Trump has talked about reciprocal taxes.
Correct.
Right?
Correct.
So if that is reciprocity is what is important, then clearly we can charge zero on the.
It will not make any big difference.
It will not make a big difference. That's point number one.
Okay.
The other important point, and why we think tariffs are not such a big issue, is that of $1 of generic medicine spend that the patient spends in the US, only about 40% of that is captured by the manufacturer out of India. 60% of the value of that generic spend actually sits in the US. And it is earned by the trade in the US, whether it is pharmacy benefit managers, retail pharmacies, wholesale, and so on and so forth. So a larger part of the value chain actually sits out of the US, and hence, in that sense, I think the impact on us will be far lower. So if and when that these tariffs do come, we think that the impact, there can be some disruption for sure,
Definitely.
but it won't be structural. It won't be something that we will have to absorb, and it will not be life changing in that sense.
Okay.
Is how we're thinking about large part of the pharmaceutical formulation export.
So Motamoti, you are telling this tariff noise, if we restrict that noise only to pharma, you are telling that there is no much, we can just hear to all this noise, but the impact on trade
Is
on
not
both
going
the
to be
side
much.
is not great. And the outcome, when you are telling me this, what I'm understanding is that in case if he puts tariff on our export, it indirectly troubles their own value chain, because you are telling 60% of
Correct.
theirs. Correct? That's what my understanding is correct, right?
Correct.
So he has to be careful in executing whatever he is telling us.
Correct. Correct.
And adding to that, one question is that, say, India is reducing the prices of quite a few medicines. This is what they told in the budget.
Sure.
Because of that, any margin pressure on any of these organizations?
No, none at all. So these are largely innovator, life-saving drugs in some sense.
Okay.
And like I said, we're importing about $400 million worth
Okay.
of products, about 10% import duty. It is not much.
Not much.
And these are really life-saving drugs. So in some sense, I think I'm very happy that the government of India has actually decided to cut, to have no import duty, because you're not earning too much out of this. And a $40 million in the overall scheme of things is hardly.
Will not matter much.
Will not matter.
So adding to that, in general, we are mutual fund distributors. We generally don't tell our retail investors to go to a sectorial fund in specific.
Sure.
For reason, because it is more of a tactical call. This is what we feel. As a fund manager who is very strong, whether deep rooted in this particular thing, you just tell us for the benefit of our viewers and investors, is it really a tactical call? What is the size of the industry? With all this broader perspective, how many stocks are there? How is your portfolio? Little more explanation on how are you looking at DSP?
Sure. So, okay, let's just think about, when we think of a sectoral fund, we typically think of a monoline industry.
Correct.
With a couple of drivers, and that is why, by and large, we say stay away from sectoral funds, right? Healthcare, however, is not a sectoral fund. It's actually a broad-based thematic.
Okay.
And like you started your initial comment with, there are multiple of these businesses. There's India formulations, there's exports, there's hospitals, diagnostics, APIs, patented APIs, generic APIs, multiple businesses, very, very different drivers for each of these businesses. And hence, there isn't one single 1, 2, 3, 4 drivers which actually define the destiny of the entire sector. It's a very, very broad-based, theme in that sense. The second point that I want to make is that when you think about healthcare as a sector, it is fundamentally underrepresented in the equity index.
Right? Underrepresented.
Underrepresented, I'll tell you why. I'll give you some facts. Some numbers. If you look at the broader indices in the US, right, in Europe, in Japan, some of these developed countries, double-digit contribution of the index, of the diversified index from healthcare is what is the number. If you look at Nifty, Nifty is about 4.5% of salience in the Nifty from healthcare. The reason for that is that this is a very fragmented sector.
Less than 5%, is it?
Less than 5%. So versus the broader, bigger markets where you have probably 10% kind of contribution from healthcare, in India we have only 5%. So that's
with 140 crores of population.
With 140 crores of population, with exports and local market, with hospitals, with diagnostics, all of this. And the reason for that is that it's a very fragmented sector. The largest player in the India market, India formulations market, has an 8% market share. Okay, right? 8.5%, give or take. The largest bank will have upwards of a 20% kind of market share. So other sectors are actually far more consolidated versus pharma, which is fundamentally fragmented. So the overall opportunity is sliced into these multiple pieces.
Okay.
And then within that, the market shares are also fairly small. So that's how we are thinking about it. Hence, the index always is underrepresented as far as healthcare is concerned. The last point that I want to make is how I think about allocation to a healthcare sector.
Very important.
Right? Is going back to this developed world, example of if indeed a 8 to 10% allocation to healthcare is optimal,
Okay.
right?
Okay.
And these are markets which are at 60,000-80,000 per capita,
Yeah.
$80,000 per capita.
Understood.
These mature markets are and our journey, we are at $3,000. We're still,
Long way.
moving towards that.
Yeah.
So the way we think about this this allocation piece is that, let's say 8% is your right number, 8 to 10% allocation to healthcare as a sector.
Okay.
Minus 5 that you likely already have by virtue of owning diversified equity funds, and within that, there will be some pharma slice of pharma healthcare slice already. So 10 minus 5 is the allocation you ought to do in a healthcare dedicated sectoral fund, is how we're thinking about this. Of course, each person should do a lot more work around capital, about the kind of allocation, about your needs and so on and so forth. So, but this is just a framework to think. It is not a recommendation. It is not a rule which is, cast in stone.
Correct.
You should do more work around what your needs are, how you are thinking about it. And if this seems like an extremely difficult decision for all retail investors, I want to say this unequivocally. If it seems like a difficult decision, don't take it. Right? It's really as simple as that. But if you do take it, then, this is how we are thinking.
Understood. Indirectly, you are telling that it is at the discretion of the distributor or the advisor to understand the customer nitty-gritties and add that 5% if required or not.
100%.
Correct.
100%. I can only give you a framework of how I think about it.
Correct.
And, but finally, it is up to the consumer, the investor, and he should think about it based on his own needs, his own, capital requirements.
His financial planning, his
Correct.
asset allocation.
The last thing I think I want to highlight, that you should never chase a sectoral fund when the going is extremely good. That I think is a very, very clear thought process in my mind.
Indirectly, viewers, what is he trying to tell you is that don't enter into any specific sectorial fund by looking into historical returns.
Correct.
It's very clear because that is common today. Whatever jo dikhta hai, wo bikta hai. Whatever has done well, generally people will see online and they invest. So better to really understand the nitty-gritties. Talk to your financial advisor or mutual fund distributor, understand the nitty-gritties, then you cut the check. It's a very important message.
Yes.
And last question with you. With this production-linked incentive, and India is moving from importing country to an exporting country, lot of structural change in last few years. By keeping that in mind, what is that changes which happened in this particular domain actually?
So the PLI scheme is an extremely well thought theme.
Okay.
The government of India is basically trying to reduce the dependence on imports.
Correct.
Large part of these imports are from China. And what is China plus one is a very prevalent theme.
Correct.
Important for the rest of the world, equally important for India. India imports about, give or take, between $2.5 to $3.5 billion worth of intermediates, bulk drugs and APIs from China. A lot of this is from penicillin G, which is a starting material for more than 40 to 50 antibiotic APIs that, as Indians we consume. And there China's market share is 100%, right? So
they are 100%, is it?
They are 100%.
Okay.
And it's not that India does not have capabilities to manufacture this.
Okay.
It's just that China put up such large capacities that their ability to cut prices was just huge, and Indians started to make losses, etc. With the PLI, what is happening is that now some of that is actually coming back to India.
Okay.
And it is one product at a time, gradually. I think over the next 3 years, some of these factories are coming on stream now. over the next 3 years, this dependence on China, this dependence on imports will come down a whole lot. But it is happening one product at a time, and not there is no magic wand in pharma, in chemical manufacturing, where you can just take it to zero over 1 year or 2 years, etc. It will happen gradually. It will keep coming down much sharper in the years where the some of these penicillin G kind of facilities come up, and then a gradual slip from there on as well.
So you are telling that things are in place, maybe slow, but it is on the right track. So
It is certainly on the right track. Yes.
And other than US, are we exporting medicines or pharmaceutical materials to other part of the world, or we are more only to US?
So US is one of the largest opportunity in exports, but the non-US exports piece is as large as US, right? So US will probably be in the ballpark of about, I think 40% of the overall.
$9 billion is
$9 billion on a base of $25 billion of exports that we do. So $9 and $10 billion in that ballpark to the US, $15 billion to the rest of the world, right? That's how large we are, but that that 25 includes APIs as well. So it's not
whenever we are exporting to that extent we are importing from China this base materials as on day to some extent.
Base materials is about $2.5 billion on a 25 billion export bid. So it is relatively small. But what is very important to note is that in the rest of the world markets, we are extremely large, because in many of the countries, India is probably the only choice that some of these countries have, because nobody else really, is supplying these countries drugs to these countries. You saw a thing of the, a slice of this during COVID, right? In the vaccine space.
Correct.
Who supplied the world vaccines? China was one. India was another large player. Supplied vaccines to the world. We hardly imported any vaccines. So that's pretty much the same in pharma medicines as well.
Okay. So you are telling 2-3 things for the takeaways for my customers is that as an investor, one has to be careful while coming to the to this particular sectorial fund. Point number 1, SIPs are possible if they want to do, but they should be careful while entering and exiting. Point number 2, and India should not worry, or investors should not worry too much on tariff related thing, whatever is we are reading, hearing everywhere. Chirag, last point. Is there anything else from the shelters of DSP you want to communicate to the investors as far as your particular fragmented sector is concerned?
So I think what happens with healthcare is that if you look at the last 10 years or so, the healthcare index is compounded at that 10 to 12% kind of zone. So healthcare earnings have compounded at that. Very good. I think that kind of growth is something which we keep seeing opportunities, pockets of opportunities to keep, looking at that kind of growth. What we need to understand is that across these multiple sectors, we will keep taking bets. Depending, at some point in time, we like, one sub-sector a lot more versus some others. But there is enough opportunity. The entire pool is give or take between about 100 odd companies, plus international companies, which is another important slice for DSP Healthcare. About 15-16% of DSP Healthcare portfolio is in international companies. These are companies which are global companies. These are companies that are investing in medical equipment, medical devices.
So they are listed elsewhere.
They are listed in the US largely. And these are companies which are investing in fields where there are no options available for investors to invest in the Indian stock market. So things like medical equipment, genomic research, these are opportunities which are not available to invest in, because there aren't any companies which are focused on this. So we've gone there. It's an exposure which is completely uncorrelated with the rest of the generic heavy index that we have.
It is because the machineries, etc., plants, etc., whatever you are telling, definitely they have nothing to do with the pricing issues, whatever we have in medicines.
Correct.
So that goes along.
It's a completely uncorrelated business, and that is what we like about it. That sometimes it may not give you in line with benchmark returns, but it adds a very, very good balancing factor. Reduces the risks dramatically. That's how we think about it, and these are obviously anyway good businesses.
This fund is how old now, healthcare?
We're shared more than 5 years, and I think one of the good things about DSP is that we did the NFO at absolutely rock bottom of the sector.
I can still remember the theme at that time, the presentation we have seen that. It's a good theme at that time, yeah.
So it's been a little more than 5 years, but we caught the bottom, and then things have moved up from there.
So this is the conclusion that investors should be careful if they are coming to a sectorial fund. One has to be careful on the historical returns, but definitely many of the portfolios are having healthcare, medicine and all the segments whatever you have told in a flexi cap or a large cap fund already.
Yes, yes.
Thanks, Mr. Chirag. Thanks for giving us quality time within your busy schedule. Whenever we need such more information, we'll keep in touch with you again.
Pleasure is all that. Thank you, sir. Thank you. Thanks.
Viewers, we are quite confident that these kind of conversations are quite useful for you to understand how fund managers think. These videos also help you to take right decisions on your way towards your financial independence. Do subscribe to our channel. If you found these conversations are quite useful, don't hesitate to like us. Share these contents with your friends, colleagues and dear ones. Do follow us for more episodes of One-to-One with the Fund Manager. See you next time.